Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new Invit offering. GR Highways Investment Managers Private Limited. The company basically is bringing out its Invit. Joining us on the show today is management, Mr. Amit Kumar Singh, the CEO of the company, and Mr. Harshal Sawant, the CFO of the company. Gentlemen, welcome to the show.
Thanks, Piyush.
Thanks,
Thank you so
thanks,
much for
Piyush.
having us on the show.
Invits are unique of its kind, basically popularized by the government enabling, easing out the procedures, the rules, the taxation benefits. Finally, it took off. We already have seen two Invits getting listed. There's a third one actually, which will be, and will also actually sort of expand the investment options for the retail investors also, institutional investors also. But the entire thing starts from why Invit was being envisaged by GR. Is it a route to monetize the assets, and how basically you're looking at the future for this particular offering?
Sure. So, see, in our Invit, basically, if you see as a structure, Invit is being sponsored by a company called Aadhar Shila, and who is going to act as a sponsor and project manager. And Aadhar Shila, of course, will participate in the same round at the same value which get discovered, during this book building process along with other investors. GR with GR Invit has a basically understanding, which is basically you can say ROFO, which is right of first offer. So GR is the one who is basically as a part of the formation transaction is supplying this seven assets which is coming into this Invit. Maybe I'll just take a minute to explain. These
Sure.
all assets are called HAM asset, which is hybrid annuity model. So what happens basically 100 rupees the project cost, authority pays you 40 rupees during construction, 60 rupees you get over the next concession period or your operation period, which is 15 years. So, and this concept from NHAI, National Highway Authority of India, was introduced almost 2015-16, and it became super hit because authority almost awarded more than 400 projects under this method. Now we have understanding with GR where GR is selling to this Invit the which is coming as a part of the formation transaction seven assets which are the completed one and has been receiving annuities on time. As we speak, out of the total 210 annuities, 37 annuities have already been received on time, before the due date rather. Now, basically coming to the structure. So, what is going to happen is we are not only talking about the seven assets, Piyush. We are also talking about 23 more assets which GR has basically under its under its portfolio at the different stages of development. As and when this asset will get completed and subject to SEBI InvIT regulation, when they would have received two annuities, InvIT, this InvIT proposed to buy them, acquire them under this ROFO agreement. Point number one. InvIT will also look at third-party assets, which is non-GR assets, because as I said, we have almost 400, more than 400 other assets, given by authority, or rather awarded by authority, and those assets, other than the, of course, the bigger ones, bigger players, are also available in the market. Now, of course, Invit has a opportunity to explore those third-party assets also. And third point, I will maybe from a simplicity perspective, look, this is any platform, whether it's an Invit or a company, your continuity is a most critical thing. So we are not just talking about this 7 plus 23 or 30 assets. We have got to a ROFO with GR where whatever GR will develop over the next 5 years, that will also in the road sector, of course, in the road stream, those on those assets also Invit will have a ROFO. So basically, we are not talking about a 7 plus 23 30. We are talking about whatever the next 5 years GR will develop plus whatever we could acquire from the market. So I think with that understanding with GR and the opportunity, we can say very easily that our life of the Invit gets elongated to up to 2045, 2046, 47. And opportunity wise, see, I think governments remain, continued focus on infra and especially on roads, and that can be seen through the allocation which Ministry of Finance, even this interim budget has been done towards, MOT itself is an impetus that basically government is remains focused towards the infra development. And I think our Invit, just because it's a road Invit, primarily is going to be road Invit, will get benefited out of that the focus which government is talking about, whether it's the third largest economy to become in the next 5 years or up to Amrit Kal 2047, whatever the growth we can
Sure.
see. Yeah.
Right, and also let's talk about the sort of interest which is being sort of ascribed to the InvIT. Actually, like it's 14% per annum. How actually sort of that was being derived in a like concise way?
No. So if you look at the market returns, the equities which are given over the past 15 years, it is around that 13 to 14% level. The eventually the IRR will be determined through the book building process, at what the issue price is determined. But we are at a level which is definitely more than whatever the GSETs, bonds are offering to you in the AAA category. We are in a much better space, let's say 300 to 300, 350 pips above that. So we are providing that kind of return with a counterparty which is NHAI, which is giving you a stable cash flows throughout the concession period. And we are also entering into a O&M contract with GR Infra, which is
Mhm.
a fixed price contract, ensuring that our cash flows are almost fixed for the balance concession period. So that will ensure us to give a yield to the unit holders, which is at the level at which the price will be discovered.
Yeah, I was just checking that the cash flows are almost going to be around in the range of 900 1,000 crores. That is the projected again cash flow for FY
Correct.
24, 25, 26.
Yeah.
Right.
So perhaps that's something I think which our viewers can take note of. Regarding this issue, how much is the funds which you are going to raise for this InvIT?
So we are proposing to raise almost 2,500 odd crores, barring maybe 100 odd crores which will be used towards the issue expenses, and maybe 15 20 odd crores which will be kept as a general corporate purpose. Uh,
Mhm.
at InvIT level, almost 2,400 crores will be used to pay the SPV's debt, which is as of now across in seven SPVs. We have debt standing as on 31st Jan almost 3568 odd, 35,6,800 crores, and that out of that 2,400 crores debt will be paid off once the InvIT issue happens. So with that, our leverage will be quite less, because as per the InvIT regulation, you can have a leverage of only 49% initially, and then after six successful distribution, you can go up to 70%. And you should remain AAA. And then we intend to acquire next round of assets using our leverage which we would have. Yeah.
Okay, so that implies two-thirds of debt actually is going to be paid off.
So I think out of in this construct, it's not, yeah, two-third of the debt will be paid off from this proceeds, and the balance 11 whatever 1150 1160 odd crores will be raised at the InvIT level, and that again will be paid off SPV debt. So InvIT will have just 1127 crores of debt add down. So you can say by the time issue gets over and issue gets subscribed, and which in the leverage terms, it will be quite lesser. So you'll have basically lever to basically do more
Acquire.
leveraging at yourself and acquire assets through existing leverage benefit which you'll have.
Sure. Just a word, basically, Miji, if you can give us a sort of highlight regarding which are the assets which are coming into this InvIT, which they are in which geographies.
Sure. So as a part of the formation transaction, Piyush, as I said, there are seven assets, completed assets, which is being taken, into this InvIT. Two assets are in the state of Maharashtra. Two assets are in the state of Gujarat. One in
Mhm.
Uttar Pradesh, one in Punjab, and one in Andhra Pradesh. So this is the geographies. And then other than that, of course, the next round of ROFO assets, that is pan India. That is everywhere. But as a part of the seven assets, this is across five states, and all these are the completed assets. Annuities we are, as I said, has already been received, and there's no. Basically, we are not worried about whatever happening in those states, because if you're doing the major maintenance and operation and maintenance properly, you will keep getting annuities, because toll collection is not which is our prerogative. That is the prerogative of authority, NHAI.
Okay, that sounds good, and perhaps should be interesting to watch out for. Regarding the sort of markets, how actually are looking right now? How has been actually the sort of I would say not exactly toll collections, but how has been the market for you from the perspective of traffic, from the perspective of how you have been observing the trend so far over the last 12 months?
Of course. So if you see, while the assets we are acquiring, those are not because as I said, toll collection is not our prerogative. we keep getting fixed annuities from NHI. But
Sure.
even if I just want to just tell you that if you see the last 2 3 years post COVID, because of across the country, toll collection has grown in the range of 11 to 12 years because of the
Hmm.
higher WPI and because of the higher economic growth. So even if you see, and I think with the higher economic growth, the kind of GDP numbers we are talking about, we don't see that growth to get subdued. So in the last 1 year, even if you see, even the next 2 3 5 years, whatever the year we are talking about, we can say that even the toll remains a very toll collection and toll revenue is going to be as basically robust as we have witnessed in the last 2 3 years. So from a collection perspective, we don't see any challenge. Whether I think it's industry itself is poised to grow at a decent 7 8%, 10% kind of revenue numbers. Yeah.
Okay, sounds good. And help us also understand from our viewers' perspective that is this something where actually the investors actually will be able to sort of get a fixed rate of interest over a particular period of time? Is there any sort of this is easily saleable on the exchange? I'm asking questions from a viewer perspective.
Yeah, yeah, no, no. I think thanks for asking that, and means I would want to convey to all your viewers, to all the friends and all the investors, that this is basically is a hybrid instrument. If you see, so what as Harshal had explained, that what you get almost 350 bips, 400 bips higher than a debt return, which is your FD, which is your maybe your uh,
GSEC.
GSEC.
Much, much higher than the fixed deposit.
Yeah,
Yeah.
and much higher than the fixed deposits. While of course banks are under pressure to garner more deposits, so you're getting a higher rates now. But I unlikely that scenario is going to continue. So basically, so from that perspective, and of course, this is much higher than that. Of course, we won't be able to say that what an equity market what you will get here, because that's a very complete different ball game, and
Hmm.
we even won't dare to say that. But yes, in from a continuity stability perspective, right? I would say to that, suppose if the X is your overall quantum, which can be investable surplus, which have what we call, I think it's a decent chunk. Maybe it's a depending on what's your
Risk appetite.
what's the risk appetite, what's your age, but maybe a 15 20 25% you should have in this kind of instruments, because this gives you a fixed yield over the next 13 14 15 years or maybe 20 years, because we'll keep acquiring assets and we are committed to pay that kind of yield. And I think that insinuates you from the market risks, the volatility which is happening, whatever it's global or domestic. So I think this is a very perfect blend of return what you are getting. And I think the kind of rates we are talking about, I think it should fit the bill of most of the investors who even would want to get committed in equity space, just to diversify something which is not an FD or something, but which is almost giving them the same kind of returns. Yeah.
Right. One last question. When you pay off the debt, is there any anticipation from your side? Perhaps my question goes to Harshilji. Is there any anticipation from your side of any possible upgrade or any positive action, any positive review by the credit rating agencies? I'm just thinking like, can there be
Yeah.
any sort of
So
positive implication?
sure. So Piyush, we have already obtained a provisional credit rating for the trust, which is AAA by CRISIL, CARE, and India Ratings for the debt
Yes.
facility. The debt facility limit which we have set is for 3,000 crores, which we have obtained from these credit agencies. As Amit mentioned earlier, the leverage will be much lower of close to 1,100 odd crores. So even at a higher leverage, the rating is AAA. Plus,
So
all these
basically, I would jump in between and say you can't improve than that.
definitely. Plus the individual
there's
asset.
no there's no triple A plus.
Yeah.
Yes.
Plus, the individual assets on a standalone basis are also AAA. Considering the counterparty and the estimates which has been factored in for the O&M and major maintenance, all the individual assets on a standalone are itself AAA. So
That's
there cannot be further upgrades to that level.
Absolutely. That's good to hear, I think, for our viewers. So I think AAA is the rating. Deleveraging is going to happen. More assets as a part of first offer will be in the offing whenever actually the assets are ready to be given. So 7 assets for now for the start. Um, 23, whenever they are ready, more to be added and more from the industry if possible. So it looks a growth story, and that's actually the sum for our viewers. Gentlemen, thanks a lot for coming on the show and giving us all the insights about your new Invit.
Thank you so
Thanks.
much.
Thanks,
Thanks.
Steve.
Thanks, Piyush. Pleasure is ours. Thanks.
And dear viewers, with that, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.